The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, early edition at 8:06 a.m. on this Tuesday, the 24th of June. We're looking at the Dow futures up 293 at 43,192. This is very important. Why? Because that 9-period moving average flipped negative just very briefly. It didn't in the Dow itself. Look, I'll show you the cash index going to yesterday's close. Look, still green for the 9-period moving average. And that H pattern, look at this, taken out. In the YM, so far, it's making rather a U-shaped pattern, trying to go for the double top to the last high. Now, what's really important about this is that the weekly chart, the 9-period moving average finally flipped to positive. And that's really, it took so long from the time that it flipped negative back on in the week of the 14th of March, going all the way from, let's give it a price, around about 43,300s, down to the low that was made at 37,024 on the week of the 7th. That's the week of the 11th of April. That's the 7th when it turned around. And finally, you've got that 9-period moving average. Instead of deflecting lower, well, the week is still young. It'll be the second day of the week. So we'll see what happens. And the monthly chart is still very good. But wait a minute, look at this. This is the continuous contract in the E-mini. It broke to a new recovery high. That makes it a sell signal that actually never went to a sell mode because the 9-period moving average was so strong. Even though we were short, took a little bit of some gains and a little bit of loss, basically a non-trade really. And now what we've got is something very important because I've got this as a leg C in the Chapman wave methodology, and D is usually a buy signal to buy mode. So even though there could be a pullback after this, I'm anticipating that we're going to go to at least a leg D to just under 6,200. We're at 61.26 right now, up 49. So a leg B has started in the weekly chart. Excuse me. That's really nice action. Now, what you really want from a leg B, especially after a massive single leg A, is that you don't want that B to just stall. I thought there was a chance that it would stall here. And of course, without the Iran bombing, we could have had oil creeping up. Look at oil. Oil prices, instead of going to 80, went to 78 overnight on Sunday, trading now down 268 at 65.83. So much for that. Now, the only other thing that is really important is that I believe from what I'm hearing is that Israel is continuing to attack Iran. Iran evidently broke the ceasefire. That's what was said. And that means that there could be some conflagration going on a little longer than anticipated, thinking that there could be some kind of a ceasefire. Well, wait a minute. Let's just go back to our indices, because that's what we really want to know is, where's the market going? Well, so far, that sideways consolidation that we're anticipating has unfolded and not gone down anywhere close to what normally you would expect, an 8% perhaps decline in a move like this. It's been very mild. If you go back to the NQ, NQ is the NDX 100 trading vehicle, E-mini continuous contract. It's in leg D at a new recovery high. It too, at 2, is in a leg B. And as I was saying before, what you want is a leg B after a big move is to have another pretty strong move. You don't want just a nominal leg B and then a pullback, because then what happens is it goes into a sideways range. It tends more to use time than price, which is kind of what I was anticipating in this sell-off that we started to. Let me just go back to this right here. The day before the sharp plunge, we actually were short. We have a core long position, both in the Dow from a long time ago. We've kept those core positions, and the 3 times long, the UDOW, kept those. But at the same time, we wanted a very short-term trade with the SDOW. Took real nice gains, about a 6% gain on a small position, and then got stopped out. Should have been stopped out at the slightly higher than the entry price, but overnight, I didn't see many trades at all. So we took it there. We took a 20-cent loss, which is really nothing on the core position. And that was just the trading short-term. I'm actually, in a certain sense, I would have liked to have had some kind of short. I don't think this is all over, that we're just going to scream to the upside here. I mean, if you're looking at, well, let me just finish this first. RTY, that's the Russell 2000, doing quite nicely. It's up 20 at 2169. I've got this as a peak B right here. It's on the 200p moving average. It should be going higher towards the 2220s. It's at 2169 right now. A weekly chart, 9p moving average, for the first time since that, this is actually going back to March, has crossed positive. But the week is young. We have to wait for Friday to know whether or not this is going to sustain. But it's a good sign. And now we can go to some other things. If you're looking at gold, because of what's happened in the Mideast, and that basically it's saying, okay, gold has had its day in the sun. It's down 54 at, let me just see that right now, 33.29, underneath the Chapman Wave inside track repellent zone. So that's still a repellent zone. To get back again, we'll probably have to get to 34.20. That's almost 90 points from here. So I just think that in the shorter term, gold is going to be pulling back. In this, I drew the rectangle in the weekly chart. Let's go to silver. Silver's the same thing. Silver is trading just down 11 cents at 36.07. It's a little bit better chart, but I think it will be following the gold chart. We'll see what happens. Let's go to high-grade copper. High-grade copper is doing quite nicely. It's up 0.06 at 4.90. This is going to be, I wanted to put a copper stock in today as a trade. I decided we would do nothing today. We're just going to step aside. I don't want to be buying gap ups right here. I mean, now I can show you what I want to do. Look at it. Here's GE. GE's been spectacular. Had a great move yesterday. The 9-period moving average flipped negative, and then yesterday went back to positive, and it's trading up pre-market, up almost $2 at $249.75. But I think that GE looks to me like it's going to consolidate here for a little bit. We are long. We stayed long. We've taken a little bit off. But, wow, this is a fantastic chart. But does it really look like GE is going to start a brand new move right here? I can see it bounce. I can see it retest at 257. High that was made on the 6th of June, test the all-time high. I don't know if it's going to actually break out. Robinhood, here's another one, up a little bit today, up $1.69. New recovery high 2 days ago. It's getting close to that. It's at 78.04. Is this the start of a brand? No, I think there's going to be some kind of consolidation. I'll be right back. Basil Chapman, early edition, 8:14 a.m. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, Basil Chapman. Early edition, the S&P actually had a nice rally earlier on. It ran up to give you the high of the day so far. Overnight, it went to 61.43. Right now, it's at 61.18. If I'm reading this correctly, I think I did not want to do any buying. I'm a little upset that we don't have at least one short position, just as kind of an insurance policy. Made a very tight stops. It took a little bits off that were successful, and then we got stopped out. I'm just looking at this and saying the pattern that is unfolding as I read it is that, look, here's this rectangle. Here's Robinhood. Goes slightly over the previous high. It's up pre-market, but I think it's in a choppy sideways reactionary move. A General Electric, the same thing. I think it's choppy sideways. What do you do when you had, look at this, one of my favorites that we don't have, we've had it before, we don't have it now, I've spoken about it many times, we have some positions, or we've had some positions that are within the ARKK, ARK Innovation ETF, up pre-market of 85 cents at 69.79. Leg D, is this really going to start a brand new move for a peak ABCD going all the way to the 78s now without a breather? Could be, because there's a rotation going on. And, you know, we're talking about the former greats that were absolutely devastated and now are coming back. W symbol, Wayfair Inc. is one of those. If you look at the monthly chart, you say, oh my God, that's just terrible. Look at the weekly chart, you say, just a little bit of an improvement. And then you look at the daily, you say, that's fantastic. 20.41 to the 50 area is fantastic. Well, it looks a little overbought, doesn't it? All the technicals are great. So all I would say is I'd put this in here, a rectangle formation. I think there's a possibility, maybe slightly higher towards 52, but basically we're looking at a trading range between 52 on the upside, maybe it goes higher, but 52-ish. And then on the downside, it's trading at 49.80, 45 to 43. That to me looks reasonable as just a digestive phase. So with that said, let me show you the GDX. The GDX is trading down $1.11 at 52. It's had a spectacular move. Now it's gone for the sideways range. I typed in the rectangle formation, and that's kind of what we're getting. Peak D in the weekly, leg F in the monthly chart. It hit, look at this, I had a target right there going all the way back to 2012. And that was the first major high that became a reversal dreaded H pattern at 55.25 back in around about July of 2012. And where did we get to? We just went to 55.15, and we just went to scroll across. There we go. We went to 54.70. Really close. So now I think digestive phase, that's good. Gold will have to find something else now rather than the warrior of the Mideast. Well, I don't know. That's what I'm thinking. Silver is trading down a little bit. It's held pretty well, but I think it's going to take a bit of a breather now. I do have it as a leg B in the weekly chart, which says at some point it should get to a C and a D. But it is an E in the monthly chart, and it failed to get to the 38s, which was the upside target. Did very nicely in the 37s. But it could have gone just a little high, and it didn't. So let's just look at that. The SILJ was a question I had yesterday. SILJ did a leg D in the monthly chart, peak D in the weekly chart, peak F in the daily chart. Now it's consolidating at 14.50, down 16 cents. I think it tests 14 over the next week or so, and that's going to be the big test is 14. Let's go on to high-grade copper. Just back to high-grade copper. I want to see if it's holding the gains. Yeah, up 0.04 at 4.89. Not bad. Let's go to did that. SMHs. Semiconductors were up before. They're up at about a 3. Now they're up 4.18. So I said to subscribers, we could have had a trade today if there was a dip in the semiconductors in one of the 2 or 3 times long vehicles, just as a trade, but you would have to get the dip. And if you get the dip, if there is, look, the Dow futures up 258 right now, the S&P futures up 42, the QQQ up 211. So if there is going to be a dip, well, first of all, on Friday, I had a reading that said that the Dow should go, let me just go to the Friday reading right here. Yeah, on the that's Friday. On the Friday reading, it said that the Dow should go negative before it goes positive on Monday. That's what it did. Yesterday's reading said that the Chapman wave chin gauge was so high that there should be overnight buying, and there has been. Now what we've got is that within the context of the action today, with the gap ups that are going to occur, if they start to be filled later in the day, for whatever reason, we never know quite what the reason is going to be or what the market accepts as a reason for it to change course, I think the selling will go into the close. So I didn't want to be buying even a pullback from a big gap up and then be stuck with something going overnight negative, and then perhaps maybe tomorrow's negative. So that chance I didn't want to take. We've got our long positions that we didn't want to change, get out of completely because they've been so good. I mean, look, even a Microsoft, all-time high, even as we speak, all-time high at 488.64 pre-market, up 2.64. These are... What do you do if we're in 338? What do you do if you go completely out? How do you get back in at that kind of a low? It's really impossible. So you want to be adding to that on sharp dips, and that's what we're going to be doing. Going for the leadership, and look at the rotation that's going on here. Look at Apple. Apple it's just dull. I mean, something's gone wrong with Apple. It doesn't show the kind of leadership that it used to show. Whereas Microsoft is showing leadership for the first time in quite a while. So even within a sector, you're looking at some individual stocks that are doing way better than others. And I'm saying in this particular phase, just as we did for the last phase, we want to go for what I consider to be the percentage winners. I don't want to be sitting there saying, KRE, the regional bank, is starting to move. I want things to be actually moving. But now I am interested in the rotation. And it says, aha, finally we might be seeing something going on. I haven't done anything yet, where the regional banks start to get the kind of rally that has endurance, weeks, not just days. Is that going to happen? Well, there's certain conditions that have to be met. If you look at the XLF has a slightly different chart pattern, but just on a purely visual level, just technicals as well, but mostly on a visual level, the KRE is just showing a little bit more, just as the IWM, the Russell 2000. Have a look at that. Have a look at that Russell 2000, the way it held the 200-period moving average. The 9-period moving average didn't go pink, and it's just trying to turn around here. So, and the 9-period moving average for the second week has been green. So you're seeing some rotational strength in areas that had been very weak before, and that's going to be very important in this particular phase. I'll be back in a moment. Basil Chapman, Tiger Ignitions Hour, early edition.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
All right, we're back. I don't know what the economic news was just a moment ago, but the S&P took a little bit of a hit, maybe 10 points, and then it came back. We're up 42.75, now 43.75. It's just wiggling around here, but it's good that it's bounced back. It's just saying that there is that buy the dips mentality has been maintained. So with that said, a couple of things that I need to look at here. So I want you to look at the VIX index just briefly. The VIX index, wrong chart, ESU25, let's go back there, right, and now let's go to the VIX index over here. So the volatility index, with everything that was going on, and you can imagine on Saturday, if the market was trading, that VIX index would have shot up. But actually, all that's happened is, and I've been talking about this for a little while, that the volatility index, having hit 60.17 back on the 7th of April, the day of the market upside turn, these spikes have been very minor. And it's suggesting to me, just on a visual basis, that the worry in the market is far less than the news media perpetrates. And when I say perpetrates, I mean that that's a word that I'm using very, trying to be as precise as possible, because that's the job of the media, is to sell newspapers or sell whatever it is, and therefore to exaggerate whatever is going on. And that's kind of what we see. After all, what happened in Iran is as a worry for not just one or two countries, but basically for the world, that has been right there, not on the back burner. It just keeps moving closer to the front burner, and now it's kind of off the table. So that is a very big difference in terms of the volatility being representative of the fear factor in areas that pertain to market action. So that's kind of settling aside, and that means that crude oil can come down, which it is, down 280 right now, going from the 78 level to 65. The gold is down 40-something, now it's down 72. So you can see that we've been talking about this for a little while, saying, well, we have a gold position, but we've taken a little bits off, and we have some, and I'm in a sense, I want to take a little bit more off. I would have taken it off at the open today, but I think it's always important to have some kind of a balance. In a way, it's kind of insurance. So the way I'm looking at it is both. It's an insurance, but at the same time, it is part of the portfolio. I call it a portfolio, but part of our mix of positions that we have. And we also have silver. We have CDE, and it's done really well. It's trading down 24 cents now at 882. We got in the sevens. So I'm thinking that this might be one of those times where it's prudent to take as much off as you can and try to keep just a little bit, as I say, insurance. Or you just say, look, I'm out. It's been a trade. It's been a really good trade. I'm done, and I can come back. I'll come back when it might mean that it pulls back, and then I have to buy some kind of a gap up. That's the way that you have to think of it. Or you just say, it's done as a trade. I can find other things. I can use that money judiciously. I can go somewhere else. So that's kind of my thinking here with gold. After all, I've been talking about this for ages, saying gold, fear factor. I don't look at gold as a commodity that buying and selling, that's one thing. In terms of demand, supply, I look at it as the fear factor, always. And at this particular point, that's kind of, I would say it's more off the table than on the table. So, all right, so that's done with that. Let's go on to some other areas. So AIQ, this is where I might have added because I think that in terms of the macro economy right now, the areas that are in, like this is Global X Artificial Intelligence ETF, we've been in it for a long time. We've added to our positions. I like it, but I'm kind of disappointed that it hasn't screened to the upside. You know, everyone talks about artificial intelligence everywhere you look, all the money that's being spent, etc. This chart is just, look, the other charts that are equally as good, right? I mean, let's just go to Costco. Look at this, Costco. There's the V-shaped pattern in the weekly chart, the V-shaped pattern in the monthly chart. And Costco, well, of course, they had some gold bars, but I mean, that's not artificial intelligence as an industry. It's an industry that you will use more and more artificial intelligence. So I'm a little disappointed in the sense that, and if you go to QTUM, something we've had before, we don't have it right now, at 88.91, up 78 cents pre-market. 90.75 was the all-time high back in December of 2024. Slumps down to the 63 area, comes all the way back 20 points or more, and it's trading right now. What was the last high? It was 89.90 or something? No, 90.33. So it went, look, these double tops are really quite potent as a technical tool to say, watch out, because if you break above it and hold, that's really positive. But if you keep stalling, that means it's a barrier. So I'm looking at all these patterns and I'm saying for the last week or two or three, we've seen a number of these reversals to the upside, and they've gone in V-shaped patterns, and that's really important. So I want to look at something that, to me, is also a marker for the economy. So this is AZO. AZO is AutoZone, auto parts, 3,709, unchanged right now. It had a 3,910 high, all-time high. No, sorry, most recent high. The all-time high was 39.16 back at 0.81 back in April. But it's gone sideways. You know, sideways is a trading range. Sideways, look at this, 3,900 down to 34 and a half. You know, that's think of it as 39 to 34 and a half instead of 39,000. So it's a trading range stuck in the middle, but it's telling us about the auto parts industry. And if you look at General Motors, there's General Motors. Look at this, stuck in the doldrums, down in the lows. It's up 38 cents pre-market at 48.30, but it really hasn't gone anywhere. If you're looking at Ford, look at that. Just kind of, Ford is actually looking much better. Let me make a note of that. All right, I like Ford right now. Ford, and I'll circle it. So Ford trading at $10.79, up 4 cents pre-market, trying to test the 1084 recent high. Yeah, this is a much better pattern than General Motors at this particular point. I'll be back. Basil Chapman, Technicians Hour, early edition. Dow futures up 270.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so looking at Ford Motors, it looks like that 1084 level of the around about the 19th of May should be hit within a day or two. It's trading pre-market at 1079. That would start at 1085. That would start leg B in the weekly chart. This is the first time on a very short-term basis that I've seen Ford trying to break away from the 200-period moving average magnet. Look at this magnet. It can't get away from this. It keeps coming back to the 1040 level, which is the 200-period exponential moving average. Well, it's a moving average, so it's rising fractionally, so that number will change just slightly. But it's pushing away. The further it pushes away, if it can get to 1103. So it needs to trade in the 11s. It can't just hit 11 and then pull back. But if it can go to 1103, then 1113 by what's today? Today's Tuesday. I'd say by Thursday or Friday, that'll be a really good sign for a couple of reasons. It'll be a good sign just for the economy to say, hey, Ford is actually starting to do better. The monthly chart is horrible. Weekly chart is just beginning to improve, although the stochastic's at 84%. So this will help. Most importantly, over the next 2 weeks or so, I would not like to see it break 10. Now let's call it 970. The close under 970 says, fading pattern. But it's good to see. Let's look at Tesla. The question came in yesterday at the close. Got to look at Tesla. Yeah, Tesla breaking out. Is up 641 pre-market at 355. 367.71 with a 356 round number open on the 29th of May, saw it cascade down to the 270s. So this is very important that it's doing this kind of rebound, cup formation, a little lopsided, almost like a rectangle formation. If that's the case, if it goes to 367.72 in the next by Friday, that's going to get that weekly chart to a leg B, and that's going to be positive. Most importantly, the key support is between 336 and 332 on a very short-term basis. That's Apple. FXI did not turn around and go. I think without the around thing, it would have done that. It would have done this Chapman wave unconventional flat base restart and gone back to the 34s. It did pull back from the 3750 level to 35.51, but it didn't get to the 34s. And that just said, and look, the 9-period moving average did flip pink, but if it's a good session today in pre-market, it's up 57 cents at 36.65. This is the iShares China Large Cap ETF. That'll help at least try to get that 9-period moving average back to green, and then the weekly chart can at least have an attempt to get to a leg C under the previous high, in the, just under 30, in the high 38s, and that'll be 1 penny above 37.62. Go to 37.63. That'll start a gray leg. No, that'll be. Yeah, then the stochastic should be at 80% and the MACD should be positive. So yeah, that'll be positive. So we're looking at the FXI in this kind of rectangle formation, going sideways, but the parameters to watch on a very short-term basis, a close below 35.20 says, going to test the 34s, but a push into the 36.80s or higher would be good action on the very short-term basis. Okay, let's go to bonds. We haven't gone to the bonds. Bonds right now are trading down over half a point, down 18.30 seconds at 113.25 30 seconds. So I wanted to talk a moment about this. I would have forgotten, thank goodness I thought about it right now. The bonds at this particular point, the whole idea of rates, and as far as I'm concerned, the whole idea of rates being kind of secondary for quite a while, because the rates were not breaking to higher highs, but they were up in the higher range, says to me that surprises to the stock market now are not so much Middle East, they're going to be rates. We're going to get back to rates. Now, where do we stand? We stand in this situation that the TBT had a really good session going into the high at that peak D right there. And that was a great session because it started to break out. I'm talking about yields going higher, and I'm not talking about whether it's good or bad. I'm just saying it was the chart itself had a very good push to the upside with the MACD stochastic, and then all of a sudden it came down. And basically what we've seen for weeks now is that you're making higher highs and higher lows, meaning that the trend has been to see the TLT. So this is the interest, this is the inverse, this is the actual yield itself, but the TLT, it's the 20-year Treasury bond ETF, they actually have more than 20 years, and that went to an E. So all of a sudden, you've got, what was the stock we were looking at? Oh, you remember the stock where in the Chapman methodology when you go from a very quick peak A, then a B, then a peak C, then a D, and even an E. You've always got to be careful because very often you get a pullback. You remember we were looking at HIMS, and I was talking about this. There's something's very strange with this. One bar rest and it goes to a higher high. Then one bar rest, it goes to a lower high. And then all of a sudden, what do you get? You get the smash to the downside. That's the chart pattern that I always look at. So the difference here is that there's been some space between the peak A and a B, and then a B and a C, and a C and a D and a D and an E. But it's saying to me that the yields, and right now the TLT is down 30 cents at 86.47. It's not such a big deal right now. But the yields need to be monitored only in the sense that if there is going to be some kind of a market pullback here, with all the good news that's going on, I think it's going to have to be rates. And I was asked yesterday about the home builders, and I said, well, Toll Brothers to me is one of the best, although the chart it's really come down very sharply from the 169, 170 area down to the 85s, and then it hits the 200 period moving average and it bounces. But it's not, it's really just a bounce. That's all it is. The 9-period moving average hasn't flipped positive in the weekly. So I said, let's just wait a day or so. Well, it's up $1 pre-market at 113.50. So it's saying to me that the action, let's go to Lennar, that the action in the home builders, and Lennar's up $1.85 at 112.48, not as good a chart as Toll Brothers. I think that's a much better chart. And it tells me that this is an area that could benefit a lot if the yields suddenly started to come down. And that's this whole rotational thing that I'm talking about for this next phase of the bull market. If it's going to work, I think we need to see the regional banks moving higher. We need to see the Russell 2000 moving higher. We need to see areas like ARKK, ARK Innovation Fund, It's moved beautifully up until now, but it needs to push higher still. So in the macro picture, what I'm really interested in is seeing the rotation start another phase of the market, so that yes, you get the tech stocks moving up, yes, you get the quantum stocks moving up, but you also start to see those real laggards, and that would include the home builders, start to move. I think by Friday we're going to get a lot of evidence. Is that happening? I'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Real quickly, I had a question about two questions. One is about TSSI, which is TS Industries, TSS Inc., data center services, etc., trading at 28.05, up $1.09 pre-market at a new all-time high. So where would you enter it? Oh, this is a tough one. Now, if you have a high risk, what I would do is I'd close my eyes, I'd buy it right here at 28.05, and I would immediately have a stop of, you're going to have a stop of about $1.50, immediately have a stop of $1.50, and as it rallies, I take a little bit off, and I would try to keep that stop. I'd raise the stop as much as I could. If I can get 1.5 point gain, I'd make my stop a break even. And I just close my eyes, and that's, well, you can't close your eyes, but that's the only way I could trade it. As a proper trade that I would like to get in on a pullback, I would say yesterday's low was in the 22s. I would say it's at 28 right now. If it could pull back to 24.30, 24.30 with a 1.5 point stop. That would be the entry point. And the other one was QUBT. This one you can actually nibble in right now. QUBT, it's at $18, up 50 cents. It had a pullback. Yeah, nibble it, but I would still have a stop, $1.10 stop. All right, so let me just tell you what I'm looking for. I'm looking for the late afternoon. In the late afternoon, perhaps when I'm having an interview with Tommy, we'll see what happens. But that's where I'm anticipating. If the Dow is still up over 130, 150 points, that's really good action. But it's given back and it's only up 20 or 30 points. It says by tomorrow we could have a bit of a pullback, but this is really this is so good for the market. What's going on? We've got crude oil down. It's just the whole aspect of the Middle East is just changing completely, and that's really important, at least for this particular phase. And it's really positive for the market. I'm just saying, from this level on, are we going to get a brand new move up in GE and Robinhood and those stocks? I do think that there's some digestive action still to be had. So I'm handing you over to Tommy O'Brien, Morning Market Kickoff, and if it's when the recording comes on for the next at the 10 o'clock hour, you'll be going to Steve Rhodes. Have a great day. Check out my Opening Call Daily newsletter, and I will see you later today.